Stavros Tousios for M4Markets, and today we're going to have a quick look at gold and oil. Gold is in overbought territories, and that doesn't necessarily mean that we're going to turn around. We are on the 4-hour. We have retested the 23 Fibonacci level of that downside leg as a support, which means the next level to the upside is the 38 when we're looking at this in Fibonacci terms, right? We do have the 1890 over here. That is a very important level to take into account. But at the same time, we can include the Fibonacci extension here to see if we have any clusters. There is a cluster at 38 and at the 50 Fibonacci, which is around the 1882 and just shy of the 1890 top over here. So there is good potential for further upside here, since these sort of zones act as magnets, magnet zones. We are looking at this as an accelerated in an accelerated trend for now. We have had a rejection and the previous sort of retest of that swing low at 1840, and off we go to the upside. Now we are seeing prices coming up, and we are on the RSI and we are doing higher lows in momentum. That still suggests that there might be more upside rather than more downside, and we're not going to, of course, assume that because we are in the overbought territory now we're going to see prices reversing. We need to, however, stay above 1853 and within this channel in order to assume a continuation. If we fall outside this channel, then we're going to, well, and depending on where the high is going to be, look at 23, 38, and then the 50. Losing the 50 is going to be more bearish. It might suggest that the RSI 4-hour divergence is indeed playing out. Now, oil, we have had multiple attempts of falling lower, but we are also doing higher lows over here, not just on the RSI, but also price-wise, okay? That, however, kind of looks like a triangle, okay? And let's not forget, guys, that triangles are a continuation signal. So with the predominant trend being to the downside, that suggests that if we do see a break of, let's say, this sort of trend line over here, okay, so that would bring us around the 75 or so, then that is going to be a potential signal, early signal, let's say, breakout signal as well for further downside. Now, to the upside, that triangle is going to be invalidated around that previous swing high, 80, 50, 80, 20, whatever that is. So there is a little bit more upside to invalidate this particular pattern, the particular formation, rather than the formation in its entirety, because maybe we're going to get a different pattern and still a triangle with the full invalidation above the 8260. So in case we do see 8260, that is going to change the game plan. We're going to be a bit more bullish. We have returned back within this ascending channel as well. So our sort of idea now is to look for, and regardless of the triangle, for the 100 Fibonacci extension. That comes to around 8190, which is shy of the previous stop at 8250. Okay, we are looking at prices to potentially continue even from here, as we don't see any sort of divergence between the RSI and prices, and we haven't yet reached oversold territories. That's of course is overbought, so that's of course on the 4-hour. If we look at the 1-hour, look, we went all the way from oversold to overbought within few hours. That suggests this could be a breakout. So as long as we remain above the 85.56 swing, well, it will be swing low, that is going to probably give us another leg to the upside. But falling below the 85, 87 to 50 is going to probably add a little bit more pressure. We could revisit the low of 76, and if we do lose that, then that is going, of course, to increase the chances of indeed having a triangle, which would then, of course, inspire further bearish bets, and we could see prices returning down to 73.70 and 72 and even lower.